Good morning, corporate real estate services, and understanding how credit tenants choose locations and structure leases. And when major corporations evaluate commercial real estate opportunities, the decision making process is very different from that of a small business or local tenants. And large companies often have, or are called credit tenants, but they operate through dedicated corporate real estate departments. And part of their job is to analyze locations using a disciplined framework that's focused on long term strategy and operational efficiency as well as financial performance. In understanding how these corporate real estate teams evaluate properties and structure leases can dramatically improve your ability to attract national tenants and increase the value of your commercial property. So, for commercial property owners and investors, this knowledge is critical. So, what is corporate real estate? Well, corporate real estate refers to the management of multiple property assets used by large companies to operate their businesses from. And most major corporations maintain an internal corporate real estate or CRE department, and they're responsible for site selection, lease negotiation, portfolio management, their expansion strategy, and real estate cost optimization. And these departments operate almost like institutional investors, analyzing locations using data driven models and strict financial criteria. And their goal is simple to secure locations that support the company's operational strategy while minimizing long term risk. So, what corporate credit tenants look for in real estate? When a corporate tenant evaluates a property, they typically examine several key factors. One is demographics and market analytics. Corporate tenants rely heavily on demographic data such as population growth and household income levels, as well as traffic counts in the area, consumer spending patterns, and competitive locations nearby that are in their segment. So, for example, a national restaurant brand evaluating a site in Katy or Fulshire will analyze whether the surrounding population supports its projected revenue targets. In fast growing markets like West Houston and the Grand Parkway corridor often attract corporate tenants because population expansion creates predictable demand. Two is visibility and accessibility. Corporate site selection teams focus heavily on the traffic flow, traffic counts, and the visibility of the location. Non-ideal locations will likely be near a major highway or with high traffic counts, with strong ingress and egress access, with nearby retail anchors. And properties located on I-10, Grand Parkway, and 1463 frequently attract national brands because of strong visibility and easy customer access. So corporate tenants also evaluate what other businesses operate nearby. And retail clusters create stronger sales environments because one feeds off the other. And for example, corporate tenants often look for adjacency to, say, a grocery store, like an out parcel there, or a national retailer, or an entertainment venue, or a medical center where there's a lot of employment. This is why many national brands prefer locations within mixed use developments or in established retail corridors. So, how corporate tenants structure commercial leases. Corporate tenants structure leases in a way that provides long term operational stability while also maintaining their flexibility. And several lease structures are common. Triple net lease structures. Most corporate tenants prefer triple net leases, is the answer there. And in a triple net lease, the tenant's going to pay their property taxes, their insurance, and the maintenance expenses for the building on a pro rata share. And that structure allows the landlord to receive predictable income with limited operational responsibilities. And for investors, triple net leases with corporate tenants often command lower cap rates because of their stability. So, long term lease commitments is another concept. And corporate tenants frequently sign leases that can range from, say, 10 years to 15 years, as far as 20 years sometimes. And longer lease terms provide stability for both parties, is the point. So, it's a win win. And these leases often include extension options, allowing the tenant to renew the space multiple times, even after the initial term has passed. And that's why they're so specific about where they want to go. but also rent escalation clauses. Corporate leases typically include structured rent increases, so it accounts for inflation. And common escalation structures can be, say, 10% increases every 5 years, or 2 to 3% annual increases, or CPI based adjustments. And these increases help property owners maintain income growth while preserving the long term value of the property. So, tenant improvement allowances. Corporate tenants may request tenant improvement or TI budget or TI allowances to customize the space, and it's basically for your build out. And those allowances will help fund the build out for the unit, any restaurant kitchens or grease traps if you have to, retail interior finishes, medical office infrastructure. And in many cases, landlords can recover these costs through higher rental rates over time. So let's talk about the corporate site selection process. And corporate real estate teams typically follow a structured evaluation process. And step one would be doing market analysis. And their corporate analysts will take a look at, say, regional population trends, economic growth, labor availability, and competition in the area. And Houston continues to attract corporate tenants because of population growth and its strong business environment, particularly in Texas, too. So, step two is site identification. And this is when brokers and corporate teams identify several potential sites that meet the company's operational requirements. We set up a tour. And these locations are then kind of rank ordered against the zoning benefits or problems, parking ratios, access points, but also infrastructure availability. And step three is there's often financial modeling involved. So corporate tenants run detailed financial models which kind of project your revenue, your lease costs, your build out expenses, your operational margins. And that process is going to help determine whether the location meets the company's return requirements. Step number four is lease negotiation. And once a location is approved internally, the corporate team begins negotiating the lease terms. And this phase often involves looking at rent structure, your tenant improvements that you need, and lease duration, as well as exclusivity provisions within the unit itself. And experienced commercial brokers can play a critical role during this stage. And our corporate real estate advisory process is our next topic. And then at Houston Real Estate Brokerage, the Viking Enterprise team, our process is designed to align with how corporate tenants evaluate properties. And this allows property owners to position their assets in a way that attracts creditworthy tenants and institutional buyers. So our process includes market positioning, and we're going to analyze the property's location within the broader market and identify which types of tenants are most likely to succeed at that site. We'll look at tenant targeting. So we identify national brands and corporate tenants that are actively expanding in the market and present those properties directly to the site selection team as part of a feasibility study for the area. Lease structure. So we structure lease terms that align with their corporate standards while also protecting the landlord's interests. And it's a bit of a balancing act. Investment optimization. And once a credit tenant is secured, the property may become, say, significantly more valuable at a sale point to an investor. Also good to hold for a long-term income stream. But properties with long-term corporate leases are often trading at lower cap rates, increased compared to the overall sales price. So why corporate tenants increase property value? And from an investor perspective, corporate tenants dramatically reduce risk. And some of those key benefits are long-term leases and predictable income streams with escalations and renewal clauses and stronger financing options for the real estate owner, but also higher real estate values as a result. And for many investors, credit tenant properties function almost like bond-like investments within commercial real estate portfolios. Slow and steady. And final thoughts. Understanding how corporate real estate departments operates operate give property owners a powerful advantage is the point. And when landlords structure their properties and leases in a way that aligns with corporate standards, they dramatically improve their ability to attract national tenants and long-term investment capital. So for investors and business owners in Houston, Katy, and Fulshire, the continued population growth and economic expansion of the region are creating a compelling environment for corporate tenants seeking new locations right now. And those who understand how corporate real estate teams think will be best positioned to benefit from these opportunities. That's it for the day, my friends. Please visit HoustonRealEstateBrokerage.com to figure out how to get a hold of me. Love to chat to you more. Have a good day.